Hello, I'm Ilan Awerbuch, and welcome to this edition of Mortgage Watch for Thursday, November 12th. Well, today our topic is free candy, free ice cream, and free money. As you know, everyone likes to line up, kids, adults, everyone, for free candy, free ice cream, and certainly for free money. And that's what's going on right now in the financial markets. The government is handing out free money to keep industry and to keep banks afloat and keep the country awash in cash. There is a cost to this that'll be coming further down the line, but for right now, this is what's driving the incredible rise in the stock market. There's a very, very low or zero cost of money for banks, which we've heard about, and for industry also, because companies that have great credit ratings and are very, very large are able to borrow money at very reduced costs. Now, this is great for keeping things going, and I think it's something that we have to do. As you know, I have been a supporter of government intervention and keeping everything going as much as we can. That is, if the patient is bleeding, just putting on tourniquets on their limbs is not going to help. What we need to do is give blood transfusions to the patients, which is what we've been doing. There is a lot of feedback and fallback and pushback from consumers and from individuals, what they perceive as an unfair marketplace, which is having great benefit to banks and large companies and large investors, and much less so for small individuals, investors, and Main Street, as we like to call it. The danger is going to come when the government has to monetize all this debt. That is, as we've been speaking, what happens and how does all this debt get paid for? Right now, it's obvious that the Federal Reserve and the leaders of government are not that concerned with that. Recently, the Federal Reserve governors were polled, and they had a meeting last week that we talked about, and every one of them except one was much more concerned with the dangers of deflation, that is, with things slowing down to where nothing is going on, rather than inflation, which is where the government has to monetize the debt. In other words, take account of what's been spent so far. That means we're a ways away from that. I saw one 10-year prediction that had the risk of inflation so low as to be something not even to be concerned about. Most of us feel that it is something to be concerned about, but right now we're all on life support systems, or the economy is, so it's important to keep the money going. But what we see going on in the financial markets is that the stock market has a sense of, well, we better keep going, because if we don't, things will stop. A lot of big professional investors and institutional investors are playing along because they don't want to get left behind. But there is a big fear that behind all this government spending is kind of like a Hollywood set with a Western town. It's all a facade, and there's nothing really behind the facade. There's no real businesses going on. Everything is being pushed. Everything is being monetized and supported. We don't have much choice, but it doesn't make for a really, really long-term outlook that we're going to be thrilled about unless we come to grips with the problems that are going on now. That's one thing that I think is not happening enough. There are 400 banks, I should say over 400 banks, on the FDIC's problem list. There are probably more banks that are just kind of lurking in the shadows. These are banks that are having severe capital problems. That means liquidity and enough money to keep operating. One thing that the government has done is that the Federal Reserve released new rules this week that tell banks how to recognize and account for loan losses. We've talked previously about all the losses in commercial lending as well as construction loans that regional and area banks are facing, and they're trying to avoid taking a stock in that because they'll have to recognize losses. I still think that the best time to recognize a loss is right away. Postponing the problem and coming up with interesting accounting techniques is not really going to solve the problem. I think that industry banks have to be forced to take their losses and show what's going on. Otherwise, the government's in the position of propping up institutions that really shouldn't be propped up and just aren't strong enough to survive. Again, if we think about a patient, God forbid someone's been injured, they're bleeding, they're on life support, tourniquets aren't enough, they need blood transfusions and they need strong intervention. But at some point, we have to see if the patient can actually survive, and we need to be concerned with the survival of healthy banks. At the same time, a lot of people are looking at the too big to fail syndrome, where the government's really focused on 8 or 10 major banks and doing everything to save them and wondering whether they're really strong enough, all of them, to survive. The government is looking at Citibank and a couple of other banks to see if they shouldn't be broken up into their components and perhaps sold off and have what's left over remain as a strong and aggressive bank that can still survive. I hope the magicians on stage have lots more rabbits and balloons in their top hats. They pulled out some great tricks so far. I hope they have a few more left to go, because we are a little ways away from all of this happening and all of the magic tricks taking place. We'll talk soon in a few days about how mortgages that were done 4 or 5 years ago are also having their effect on the foreclosure market. But for now, our focus today is on financial markets, stock market, and bonds, which control interest rates. Interest rates do remain very, very low. We do think that in the near future they will come down a little bit as this thing continues to shake out. Well, it's certainly an interesting ride, and as someone once said, be grateful to be born in interesting times. I think all of us who are looking at this are being grateful that we were born in interesting times and get to be along for the ride. Remember to be grateful for all the things that you do have in your life that are working, and all the thanks that we do have to give for family, friends, support networks, good health, etc., because those are the things that will see us through. With that, I'll say thank you very much. I'm Ilan Awerbuch with Unit Trust Companies in San Diego, and this is Mortgage Watch.